Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Thursday, November 14th, 2013. S&P futures have broken out above the previous multi-year high at 1774 and have auctioned up to a new high at 1789, rallying up off of Wednesday's low at 1754. The up move began at the 1762 price level, and the initial stopping point during the overnight session was 1785. As the S&P rallied up to its new multi-year high, there was a minor pause level at the 1777 price area, which we identified in yesterday's market structure commentary. During Thursday's session, S&P futures initially encountered resistance at the 1784 price level, and at today's open, the S&P pulled back to 1777. The selling pressure ended following the pullback, and the S&P auctioned back up and retested the overnight high and went on to make a higher high into the close. In the context of the current breakout, the Follow the Bots computational model estimates the maximum likelihood expectation price target up at 1793. For a detailed look at Thursday's market developments, we'll turn our analysis to the 5-tick range chart. The 1785 price area was our initial upside target, and as you can see, the S&P encountered resistance during the rally overnight, and the order flow monitor indicated that the computerized buy programs ceased executing to the buy side. The S&P sold down from the high and pulled back to the minor support level that we noted during yesterday's market structure commentary, down at 1777, 1778. After selling off from the overnight high and pulling back to 1777, 1778, the price sequence exhibited the prototypical pattern that is associated when the market finds support. After the sell programs ceased executing to the sell side, initiated buying entered the order flow, and the S&P auctioned back up to retest the overnight high at 1785. The run sequence stalled on the retracement to the overnight high, but went on to make a new high, auctioning up to 1789. During the rally to the new high, the order flow monitor detected that the computerized buy programs ceased executing buy-side orders, and the S&P sold down modestly to 1784 at or near the overnight high. Following the minor pullback to the overnight high at or near 1784, the pattern of market development exhibited the 2-point up-down sequence typically associated with the high-frequency market maker algorithm. While the price action stalled for a prolonged period, there was no intense selling pressure, and gradually a buy-side bias developed, and the S&P traded back up again to the 1789 price area into today's close. Coming into Friday's session, we would expect to see the S&P continue its upward momentum and rally up to the maximum likelihood expectation target at or near 1793. The minor support level that occurred during today's midday auction at or near 1784 is a weak support level. The 1784 price area is only likely to hold support until the market has cut off the buying interest. Similarly, today's low is another weak support level. Key support is back down at what had been the previous multi-year high between 1773 and 1768. That concludes our daily recap of the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.